Hi guys, welcome back to the channel. My name is Brad. This is the Firefighters Financial Toolbox. Today we're going to talk about the 10 least tax-friendly states for retirees. Now this is an article from Kiplinger's and it's back from 2019 because, as you know, everything is backdated. This year we haven't been doing many studies or anything else really. A few weeks ago I did a video on the 10 best states for retirement. If you want to see that, I'll link it up above in the cards. But today we're going to talk about the 10 least friendly tax states for retirees. So whether you plan to retire at the beach, near the mountains, or to some other destination in your dreams, make sure you check out the local tax situation before you pack your bags. If you don't, you might be unpleasantly surprised by hefty state and local taxes in your new hometown. State and local taxes can vary greatly from one place to another. The difference can easily exceed $10,000 or more per year in many cases, which is enough to break the bank of a lot of retirees. So to avoid this kind of bombshell, make sure you do some research before settling in your new location. Now, one thing we need to think about is a lot of times we think about, do they have state income tax? And that is only one form of tax, you guys. And that's honestly what I'd been thinking about. But let's take a look. Our results are based on estimated state and local tax burden in each state for a hypothetical retired couple with a mixture of income from Social Security, an IRA, a private pension, interest and dividends, and capital gains. And they also live in a $400,000 home with a small mortgage and $10,000 in deductible medical expenses. So that's the example they're using. So number 10, now these go from number one is the absolute worst. So number 10 is New York, where your state income tax is between 4% and 8.82%. The average state and local taxes are 8.49%. And the average property tax is $1,812 per 100,000 of home value. There is an estate tax, but there is no inheritance tax. So the Empire State carries a heavy burden for taxes into retirement. The hypothetical couple would spend over $7,200 per year in property taxes alone on their home. And that could be higher in certain areas. It does have they do have some school districts can reduce the assessed value of their home by 50%. If you qualify, you have to be 65 or older and meet certain income limitations. When it comes to income taxes, New York's tax bite is less severe for retirees when compared to other states. Social Security benefits, federal and New York government pensions, and military retirement pay are exempt. However, anything over $20,000 from a private retirement plan, including pensions and IRAs, 401ks, etc., or out-of-state government plans are taxed. New York also has an estate tax with an unusual cliff tax kicker. Generally, the tax is only imposed on that portion of the state over $5.74 million. However, if the value of the state is more than 105% of the exemption amount, the exemption won't be available for the entire state, will be subject to state taxes. Ouch. All right, number 9, Illinois. In Illinois, they have a state flat income tax of 4.95%. The average state and local sales tax is about 8.78%. And the average property tax is $2,400 per thousand. It does have an estate tax, and it also has an inheritance tax. There is some good news for retirees. In Illinois, Social Security benefits and income from most retirement plans are exempt. Plus, the state's 4.95 flat income tax rate is relatively low. Now for the bad news. Property taxes hit retirees hard in Illinois. Illinois is the second highest in the nation. And this example house would be about $9,600 for the couple. Fortunately, there is some relief for seniors in the form of a homestead exemption of up to $5,000 or $8,000 in Cook County, the ability to freeze a home's assessed value. You must have an income of $65,000 or less and a tax deferral program. State sales taxes are high in Illinois too. The state has the 7th highest average combined state and local sales tax rate. It also has an estate tax which applies to estates of $4 million or more. That can be bad news for your heirs. All right, moving on. Number 8, New Jersey. New Jersey has a state income tax of between 1.4% and 10.75% depending on your income. The average state and local sales tax is 6.6%. Average property tax is $25.30 per 100,000 in home value. And they don't have an estate tax, but they do have an inheritance tax. New Jersey has the highest average property tax rate in the country. And on this couple's $400,000 home, you guys, you'd be paying over $10,100 in property taxes each year. It does offer a senior freeze as well that reimburses eligible seniors for property tax increases. To qualify, you have to be 65, have lived in New Jersey for at least 10 years, and have an income below certain limits. And they also have a $250 property tax deduction available to seniors if their income is less than $10,000. Income taxes are comparatively low for retirees in New Jersey, thanks in large to a very generous exemption for retirement income. Married seniors filing a joint return can exclude up to $80,000 of income from a pension annuity, IRA, or retirement plan if their New Jersey income is $100,000 or less. Single taxpayers can exclude up to $60,000 and $40,000 respectively. Sales tax are reasonable in New Jersey too. The sales tax rate is 6.625%, but because some areas charge only half the state rate on certain sales, New Jersey's combined local tax rate is only 6.6. Although New Jersey recently eliminated state tax, the state still imposes an inheritance tax. The tax range from 11 to 16% on inherited property with a value of $500 or more. That will hurt your heirs, you guys, big time. Number 7, Rhode Island. You guys found a theme so far? It looks like the East Coast, particularly the northern part of the East Coast, not such a tax-friendly place to retire. So Rhode Island has a state income tax between 3.75% and 5.99%, so not nearly as high. The average state and local sales tax is about 7%. Average property tax is $1,700 per 100,000. And they do have an estate tax. Rhode Island's spot on our list of the tax-friendly is primarily based on the above-average income and property taxes. Seniors pay tax on their Social Security benefits if their federal adjusted gross income is over $85,150, and that's $106,400 if you're married jointly. Higher income seniors also miss out on $15,000 payouts for private, government, and military retirement plans. To qualify for the exemption, your federal AGI can't exceed $83,450 or $104,350 for joint. The statewide average property tax rate is the 11th highest in the U.S. As a result, the $400,000 home would result in about almost $6,900 in property taxes. And it too has a small credit if you are 65 and you earn less than $30,000. The Rhode Island estate tax is another thing retirees need to worry about. That rate can be as high as 16%. Wow. On estates over $1,500,000, basically. Wow. On the bright side, sales tax in the Ocean State aren't too bad. It's only about 7%. Okay, number 6, Vermont. State income taxes in Vermont range from 3.35% to 8.75%, depending on your income. Average sales tax is 6.22%, and your average property tax is $1,900 per 100,000. They also have an estate tax. Let's see, the Green Mountain State has a lot of taxes. It has a steep top income tax rate, and most retirement income is taxed. Social Security benefits for singles over $45,000 and couples over $60,000 are taxed. Local jurisdictions can add 1% to the sales tax, but the average combined sales tax is 6.22. That's below the national average. And food, clothing, and non-prescription drugs are exempt from that, but you'll pay 9% on tax or 9% tax on prepared foods from restaurants and lodging, and 10% if you order a glass of wine or beer in a restaurant. If our couple had a $400,000 home, they would pay $7,634 in property taxes. Wow. U.S. homeowners age 65 or older may qualify for a tax credit worth 24% of the federal elderly permanently disability tax credit if their household income doesn't exceed a certain level. And estates are taxed if they're over $2.75 million. All right, Minnesota. Minnesota is number 5 in the list and has a state income tax between 5.35% and 9.85%. The average sales tax is 7.43%. The average property tax is $1,200 per 100,000. And they do also have an estate tax. Social Security is taxable. Pensions are also taxable unless they're from the military. Distributions from an IRA or 401k plan also taxable. Property tax are slightly above average in Minnesota. For this $400,000 home, they would pay about $4,900 per year. They also have a tax deferral program for low-income seniors over 65. There's a special income tax deduction for senior citizens 65 or older that can deduct up to $9,600 for single and $1,200 for joint filers. However, due to the deductions phase-out rules, if you make more than $33,700 or $42,000, that claim isn't a break. So for most people, that's not going to apply. Food, clothing, prescription, and non-prescription drugs are exempt from the sales tax. There are cities that add a small sales tax to it, and it can be as much as 2%. In 2019, estates valued over $2.7 million are subject to an estate tax of 16%. Wow. Number 4, Wisconsin, the Badger State. State income taxes in the Badger State range from 3.86 to 7.65%. The average state and local tax is 5.44%. Average property tax is about $1,900 per 100,000, and they do not have an estate or inheritance tax. So it says income from pensions, annuities, distributions from IRAs, 401ks are generally taxable. However, retirees who are 65 or over can subtract $5,000 of retirement income from their taxes in Wisconsin if their federal adjusted gross income is less than $15,000, $30,000 for a married couple. So that's pretty low. Property taxes are the 6th highest in the U.S., and this $400,000 home would be about $7,700 in property taxes. There are no special provisions for reducing property taxes in Wisconsin. There are some bright spots for retirement. Sales taxes are actually pretty low in Wisconsin. It has the 8th lowest combined average state and local tax tax rate in the nation. There are no estate or inheritance taxes either. All right, number 3, Kansas, the Sunflower State. The state income tax in Kansas goes from 3.1 to 5.7%, depending on your income. The average state and local sales tax is high, you guys, 8.67%, and the average property tax is about $1,500 per thousand. Distributions from private retirement plans, including IRAs and 401ks, and out-of-state public pensions are fully taxed. So I take that to mean if you have a Kansas pension, you might be all right. Kansas also taxes Social Security benefits received by residents with federal adjusted gross income of over $75,000. Military, federal government, and in-state public pensions are exempt from state income taxes, though. Shopping in Kansas can be expensive. Sunflower State's average combined is the 8th highest in the nation at 8.67%. This couple on their $400,000 home would spend about almost $6,000 on property taxes. They do have U.S. homeowners 55 and older who earn $35,000 or less are eligible for a property tax refund of up to $700. Good news is they don't have an estate or inheritance tax. Number 2, Connecticut. Boy, everybody in the Northwest and the Northeast really seems to be taxed. Okay, in Connecticut, your tax goes from 3% to up to 6.99%. The average state and local sales tax is 6.35%, and the average property tax is a whopping $2,100 per thousand. The Constitution state is a tax nightmare for many retirees. 25% of Social Security benefits, if you're over $75,000 to $100,000, are taxed by Connecticut. 14% of income from a pension or annuity is exempt for taxpayers with less than $75,000 AGI or $100,000 for married. The exemption percentages increase 14% each year after 2019 until it reaches 100%. Military pensions are also excluded from state taxes. Connecticut has the 4th highest property taxes in the U.S. So the $10,000 cap on federal tax deductions for state and local taxes sting a bit more here. The statewide average for property taxes is about $84.56 per year. The state does offer property tax credits to homeowners who are at least 65 and meet some income restrictions. Income ceilings of $43,900 for married couples, and you can maybe get about $1,000 benefit. Connecticut imposes an estate tax on estates valued $3.6 million or more, and that's a progressive tax rate from 7.2 to 12%. Connecticut also is the only state with a gift tax, so you can't even gift the things to your heirs. The gift tax rates are 7.8 to 12%. There are no local sales taxes in Connecticut, so you only pay the statewide rate of 6.35%. All right, and the absolute worst state to retire in, you guys, and this is funny because this is where Warren Buffett lives, in the Cornhusker state. So I guess if you have billions of dollars, you can afford to retire in Nebraska. So let's take a look at what the Cornhusker state offers. All right, state income tax is between 2.46% and 6.84%. So not terrible, but there. The average state local sales tax is 6.88%. The average property tax is $18.55 per 100,000. And they do have an inheritance tax. Nebraska is the least tax-friendly state in the nation for retirees because of the steep income and property taxes. The Cornhusker state taxes some Social Security benefits and most other retirement income, including IRA withdrawals, 401ks, public and private pensions. Residents can subtract Social Security income included in federal adjusted gross if their AGI is $50,000 or less for married couples, or $43,000 for singles. If their income exceeds the applicable threshold, their Social Security benefits are taxed by Nebraska to the same extent they're taxed on the federal level, meaning up to 85%, you guys. The top income tax rate kicks in pretty quickly. It applies to taxable income above $31,160 for single and $62,320 for married couples. So pretty low, you guys. If you're making $63,000, you're in the top tax bracket. Nebraska's inheritance tax ranged from 1 to 18%. The tax on heirs who are immediate relatives is only 1% and does not apply to property tax worth less than $40,000. For remote relatives, however, the tax rate is 13% and the exemption amount is $15,000. For all heirs, the tax is imposed at an 18% rate on the property worth $10,000 or more. Wow. The average property tax rate in Nebraska is pretty high. For that $400,000 home, it would be about $7,400 per year. That's the 8th highest property tax amount in the country. The state sales tax is 5.5%, but food and prescription drugs are exempt. Local jurisdictions can add an additional 2% to the state rate. The average combined rate is 6.88%, which is right pretty much in the middle of the pack for there. But with all those property taxes, you guys, wow. So one thing we need to talk about is I often think initially, do they have state income tax? Are they going to tax my Social Security? But you guys, property taxes, particularly if you own a nice home, can actually far exceed the taxes you pay for other things. Things to think about, like here in Oregon, we do not have a sales tax. So when I travel, often don't think about when it says it's $1.99 that it's actually $2.05 or more. So this is one of those things to think about. I realize this is a little bit longer than my normal shows, you guys. I hope you stuck around. If you did and you enjoyed it, do me a favor, drop me a like. If you're not already subscribed, you know the deal. Hit the button, ring the bell. I think it's important when we're deciding where we want to live in retirement to think about taxes. Because believe it or not, the biggest expense in all of our lives is taxes. The amount of taxes we spend over a lifetime add up tremendously. And as a retiree, particularly on a fixed budget, I want to think about a place where I can have more money to live on because I have less to pay in taxes. All right, you guys, thanks a lot. I'll see you.